Welcome to the Creating Wealth Simplified podcast. My name is Lauren Wells, here with my co-host, Chris Seveny. We're committed to providing you with the knowledge required to build wealth through real estate investing. Tired of consuming content about real estate? Stuck in analysis paralysis? Ready to do your first deal? As a member of our community, you will learn how to go from consuming content to taking that first step into the world of real estate investing. Our show is not about getting rich quick, but about providing you with the knowledge you need to take action. Join us as we speak with experienced investors who share action tips on how to escape the corporate world, start a thriving side hustle in the world of real estate, and go beyond your W-2 or 401k.
Welcome, everybody, to another episode of the Creating Wealth Simplified podcast. I am your co-host, Chris Seveny. Today, I have a special guest with me. I have Howard Crosby. Howard, how are you today?
Great, Chris. Pleasure to be with you today.
So I'm ecstatic to be on this episode because we're going to talk about something we haven't talked about, and we're going to talk about the energy sector and how that influences real estate, how it influences investments. And Howard has been in this arena for many decades. In 2001, he founded a company, Cadence Resources, and in 5 years took that from a modest-sized $1 million company to a modest $400 million valuation. So see some significant growth there. Howard's been on CBS Evening News with Anthony Mason, and fast forward to today, he's focused on LGX Energy, which is his re-entry into oil gas sector. So Howard, thanks so much for being here today.
Oh, it's my pleasure, Chris. Absolutely.
So, let's start first of how'd you get into the energy sector?
Well, so I parlayed my bachelor's degree in history from the University of Idaho into a career in natural resources. How that all came about is kind of a long story, but it does turn out that my late brother-in-law, who just passed away last year, wonderful man, Bob Ferguson, back in the late 70s, he was the Deputy Assistant Secretary of Energy for the United States. Mm-hmm. And he was later in charge of a major utility. He was head of a major energy project for Westinghouse at Hanford. So very early on in my career, he got me a job working at Westinghouse when we were a prime contractor on the nuclear test facility at Hanford. Mm-hmm. And that somehow spun into a whole career in energy. So while I never got a degree in geology or geophysics, I've spent a lifetime working with geologists and geophysicists in the management role of mining companies and oil and gas companies and investing in the same. So while I didn't get a degree in petroleum engineering or mining engineering, I've probably paid far more in real world experience lessons than I would have paid for a PhD from Stanford.
Yeah, it's interesting how many people, will go to school for whatever their degree is and, end up doing something completely outside of what their degree is. For me, I had a civil engineering degree, which I thought I was going to design bridges and roads for a living, got into construction. Now I'm in real estate and finance. So completely different turn. And I forget who made the comment that college is really more for people to show that they can take some responsibility for going through something for 4 years, or hopefully 4 years for some people, 5 for others, and be responsible enough to get through it. But so let's talk a little bit about kind of the companies that you've had. What type, when you're in the energy sector, there's so many different facets of energy. There's nuclear, wind, oil, gas, solar. What have you been mostly involved in?
Well, actually, I've been involved in. I got a job fairly early on in my career with United Nuclear. We were a uranium producer. Mm-hmm. I spent the better part of a year in Australia working on a uranium project there back in the early 80s. I've been involved, of course, in oil and gas exploration, development, production. I've been an investor in other sectors related to mining and energy. So pretty much experienced the whole breadth of it. Mm-hmm. And I think there's just so many misconceptions around the energy business, particularly nowadays. I think a lot of people have lost sight of the big picture in terms of the important, in fact, critical role that energy plays in civilization and in prosperity and economic development in all manner. And obviously, you know, I'm continue to be a tremendous proponent of the development of oil and gas, particularly domestically, which has been choked off in the last few years, but we think it's critically important. I mean, obviously, oil, for instance, is the largest commodity market in the world. Last year, there were, I think, $2.1 trillion worth of oil transactions in the world, which is more than double the total volume of all transactions in all other hard metal elements, including iron ore, gold, copper, nickel, lead, zinc, everything. The oil market's double the size of all of those put together. So it's the most important, most critical element of commodity anywhere in the world. The whole world runs on it. There's over 6,000 products that people use every day that are derivatives of oil and the petrochemical industry, not to mention the critical importance of oil in transportation and so forth. So, you know, there's just a lot of misinformation out there about oil's critical role in society and in the development of prosperous economies and in the uplifting of poor countries from poverty into some semblance of a more equitable situation. So, you know, I think a lot of lessons are being learned now, Chris, about the so-called move to entirely quote unquote renewable green energy production. You know, the Germans were kind of one of the first to go down that path. They closed all their nuclear plants and tried to rely very heavily on wind and solar energy. And of course, neither of those forms of energy produce firm power. They produce intermittent power at best. You know, the solar power works only when the sun is shining, and wind power, now a lot of the early windmills that were built in Germany have reached the end of their useful life with no provision for decommissioning of these old windmills that are beyond their planned life expectancy, and they're encountering tremendous problems with disposal of the blades, for instance, which are massive and hard to transport and have to be buried in landfills, and they're very environmentally destructive. So, and if you look at I mean, I'm all for people driving electric cars if that's what they want to do, but don't delude yourself into believing that somehow electric cars are environmentally more beneficial than an efficient internal combustion engine running on gasoline, because it's just not so.
Yeah,
You know,
I look at it similar to, you know, like somebody's diet. You know, you need a mix of many different things, and similar to our energy, you know, you can have ancillary systems such as wind or solar, but that's not going to power an entire country. And, you know, like you said, if $2 trillion or twice more than anything else is based off of oil, you know, I'm guessing you just can't flip the switch on that.
It's not feasible. I mean, look, the only kind of firm power that is quote unquote carbon free is nuclear power. That's the only source of firm. Well, I guess you could also include hydroelectric dams, but there's a limited number of those that can be constructed. But my late brother-in-law, who was wrote 7 books on the energy business and was a brilliant man, he always said it's an all of the above solution. I mean, that's the only solution, is all of the above. You need oil, you need gas, you need coal, you need renewables, you need geothermal, whatever works and is the most economically efficient and serves its need the best. I mean, right here in Palm Desert, California, passive solar power for home heating and home needs works great. You know, the sun shines 360 days a year here. Collect it on your solar panels on the roof and your needs are taken care of. But I suspect where you came from in New England, that may not be the case.
Well, that was not the case. And, you know, if you tried to run electric heat in your house up in New England, you would be bankrupt in about 3 months, and you're either running off of, you know, gas or on oil, which I'm in Virginia now. And here, we still have winter, we still have the seasons, and most residences here again run off of a type of natural gas or oil. um I wanted to kind of shift a little bit is, you mentioned the importance of all of this, and it's not, and I made the comment, like, you can't just flip the switch and, all of a sudden, cut off any one type of, energy source. But also, it's not only the energy source itself, but all the ancillary impacts it could have. And one of the things that you like to talk about is, that interplay between, the real estate sector and markets and, this energy. So love to talk a little bit about that.
Look, I mean, anytime you have any kind of development, whether it's commercial real estate or residential real estate or whatever, I mean, one of the first issues that you have to confront is, how are you going to provide the power to make this work? And that's going to depend on where you are and what the available sources of energy are. Now, let me give you a classic example that just hit the news here recently. In Kansas, Panasonic is building a giant plant to build batteries for electric cars. I think they've been given something like an $8 billion subsidy by the federal government for this gigantic plant to manufacture lithium-ion batteries for electric cars. Huge piece of real estate development around this giant plant in Kansas. Well, what they discovered was this plant is going to require so much electricity that their grid could not provide it. So what they've had to do is to take a shuttered coal plant and restart it to provide coal-fired electricity to power the plant that's going to build batteries for electric cars, which I find quite ironic.
Yeah, a similar thing that I, being in the real estate market, hear a lot of people say is, okay, let's just take this empty office building and turn it into residential. And, I've done that in the past, and I've seen it fail significantly, because the first thing I tell people is, you don't have the power. An office building, has, you think about a floor, might have, on a 10,000 square foot footprint, that could be 10 residential units, which have 10 kitchens, 10 baths, 10 sets of appliances. Where if that's an office space, it's got some outlets and maybe 1 or 2 kitchens, and then all the lighting that you need and everything different. All these office buildings aren't built or don't have that load requirement to actually even power these buildings. Never mind just when you look at the other resources of water and everything else they need.
Well, yeah, I mean, you're going to have to have hot water heaters, which require power, and you've got to have, you got to have facilities for plumbing that may not exist or be readily convertible, and you're going to have a lot bigger electric load to meet the demands of multiple residential units versus an open floor office concept. It's not apples and oranges. It's apples and oranges, not apples and apples, right? And the other thing that I think is missed a lot, and this is another one of my favorite things to tell people, which is, in the year 1900, which seems like a long time ago, but in the overall scope of human history was only 123 years ago, about 94% of the U.S. workforce was engaged in subsistence farming. That's what people did. They grew stuff to eat, right? Well, today, our modern day 2023 workforce consists of less than 2% of the workforce is involved in agriculture. And yet, that 2% produces orders of magnitude greater amounts of output of agricultural products than the 94% did 125 years ago. How is that possible? 2 reasons: oil and gas, because it's petroleum-based products that allow tractors and combines and so forth to work to reduce the amount of to greatly exceed the amount of agricultural work that could be done by a guy with a mule and a plow, right? Yep. And even more important, and this is something that is really very seldom talked about, is the advent of natural gas-based fertilizer. Without the fact that we have natural gas-based derived fertilizer, we couldn't feed the planet today. It would be impossible. The reason we're able to even come close to feeding 8 billion people on this planet is because we use natural gas-based fertilizer. We're not going to be able to do it with cow dung. right? I mean, it's not possible. We've got to have natural gas-based fertilizers to feed this planet. And that means you have to be drilling for oil and gas reserves for all the needs that we have in a modern society.
Let's talk about that a little bit, about kind of the drilling. And so I go, again, I'll go to real estate conferences and I'll see a company offering, hey, we're oil and gas fund where, we're drilling, we've got wells or drilling and so forth. To me, I ask the question, first thing that pops in my head are like, okay, am I investing in the real estate? Am I investing in the well? Am I investing in the equipment? Can you talk about kind of how people can invest in and leverage oil and gas kind of as part of an investment portfolio? Because I've also heard that there's some great depreciation benefits investing in some of those markets or sectors.
Yeah, well, for a long time, there were a lot of what's called oil and gas limited partnerships where people got a working interest in oil wells, and that is a tax advantaged investment because you've got the ability to write off what's called the intangible drilling cost of a well, and also you then get a depletion allowance as the well is produced. So there's an upfront tax benefit to direct participation in oil and gas drilling, and there's also a longer term tax hedge caused by the so-called depletion allowance. And there were a lot of investments structured that way back in the 80s in particular. It sort of fell out of favor because a lot of people that got into that business got into it for the tax benefits without really understanding how drilling for oil actually works and how to mitigate the risk. And I like to look at it in terms of, it's like anything else, and I suppose it's applicable to your business as well, Chris. If you invest in one building somewhere and everything goes well, you'll make money. But if something goes wrong with that one building, maybe you can't get the permits you need for it, or whatever it might be, you're going to encounter a lot of risk.
Yep.
Versus a diversified portfolio across real estate investments in a variety of places, different locations, possibly different end use of the real estate, some residential, some commercial, some office, some strip malls, whatever it might be. A diversified portfolio is going to reduce your risk. Am I right? Yeah.
Absolutely.
Yep. Yeah. Well, it's the same in oil and gas. So if you're going to be involved in like a 1, 2, or 3 well program, you've got a lot of risk because anytime you're involved in a small number of wells, there's a lot of things that can go wrong. You can drill a dry hole, which, by the way, is not the worst thing in the world. You can also have problems with the completion. The well may not perform as well as you expected. There's a myriad of things that can go wrong, and that's why a lot of the tax-advantaged oil and gas investments didn't perform as well as people had hoped. They were counting on cash flow that materialized not at all or slower than they expected. And yeah, they got the initial tax benefits, but in the end, it wasn't a very successful investment. So the way I look at oil and gas is it needs to be a part of everybody's portfolio because it's the most important commodities to a modern society. But it's best if you have a diversified portfolio of different. In other words, if you're involved in a lot of different wells, or in the hands of management that knows what they're doing and knows how to mitigate risk.
Yeah. Now, if you're investing in that sector, again, I'm just going to assume that the price or barrel of oil kind of also is something that is probably needs to be looked at or watched. And is it safe to assume as oil prices go up, you might get better returns, or is that kind of, it depends type of question?
That's absolutely, it depends. Now, I don't know how far you want me to get into the weeds here, but I think this is a really important discussion because I'm going to go back a few decades. In the 1950s, there was an eminent geologist for Shell Oil called King Hubbard. And he developed a thesis called Hubbard's Peak. And what he did was he predicted, based on the rate of discovery of giant oil fields and their depletion rates, that the U.S. production would peak in January of 1972 at 9.2 million barrels a day, and then would begin a long decline and would never again reach that peak. because our supergiant fields would have been discovered and they would be beginning a long, slow depletion, and that we would never again reach that 9.2 million barrel level of domestic production on an annual basis.
Right.
And it turns out that he missed it by less than a month. U.S. production peaked in early February of 1982 at 9.2 million barrels a day and then started declining. And by the year 2000 or early 2000s, we were down to less than 5 million barrels a day of U.S. production. And there was no indication that we would ever return to that high level, and that probably Hubbard's peak was correct. But he missed something very important. And I have to admit, at the time, I was a devotee of Hubbard's peak as well. We all missed an important thing, and that was the impact of technology. So what happened in the first decade of the new century is we perfected the ability to frack tight formations with powerful, heavy fracking technology. And that meant that huge oil reserves that were never considered producible, like those in the Bakken Formation of North Dakota, were suddenly economic at prices above $75 or $80 a barrel, because doing this new technology was much more costly than simply drilling a vertical hole, acidizing the bottom of the well, and producing oil out of a pump jack. But there was a lot of oil that was brought onto the market, and by 2011 or 2012, we were back above 10 million barrels a day, which is something King Hubbard would have said was impossible. But he didn't figure in the impact of the new technology of being able to access tight formations. In other words, where the rock was not very permeable or porous. So now what we're looking at is, yes, there's a tremendous amount of undeveloped oil in the United States. A lot of it, however, is in these tighter shale formations. And having been burned once, operators that are in some of these tighter formations, like the Marcellus Shale or the Bakken Formation in North Dakota, even with $80 oil, they're reluctant to invest large amounts of capital with the risk that the oil price might fall down back below 60 where they can't make money. So the answer is,
depends.
Not all oil wells are the same, and it depends.
Yep.
That was a long-winded answer to your question. I hope I didn't get too far.
No, it's interesting because the acquisition cost, the acquisition cost can fluctuate on an asset. So, just because the asset, the overall commodity may increase in value, if you're at the cost to mine it and get it, is increasing more significantly, or is it a price point that doesn't make sense, then that makes perfect sense from that.
And this
standpoint.
is why, because like in the Middle East or in Russia, they're simply draining traditional reservoirs where their lifting cost is under $2 a barrel. So it doesn't matter what the oil price is; they can produce it at a profit and sell it. And that's why it's a fungible product in the world market. Whereas many of our reserves in this country, although they're giant reserves, they're going to demand higher prices to be economic in many locations.
Now,
So,
is that for both oil and natural gas, or more on the lines of oil?
well, I'm thinking more in terms of oil, but natural gas is a special case, because let me see if I can explain why. Natural gas reserves tend to be they have very high flush production. In other words, when you first drill a successful gas well and it's pressurized, you get a great deal of production quickly. Like, let's say you have a successful gas well that comes on at 10 million cubic feet a day, which would be a great gas well. Okay. A year later, it's probably doing 1 million cubic feet a day. And 2 years later, it might be doing 100,000 cubic feet a day. So the decline curves are very steep on these pressurized gas wells, which means if you don't continue to drill new wells, it's very tough to keep stable production. And that's a concern. That's a concern that's not so prevalent in oil wells, which tend to deplete on a slower curve. Like the area that we're working at in Indiana. Yes, there's decline curves, but typically these wells will economically produce for 30 to 40 years from initial production. And that's not the case with a gas well. Typically.
No, this is all, very interesting because now, out of curiosity, like you mentioned, I think early on that you're originally from the Pacific Northwest. What is, I've never been to the Pacific Northwest. And when I was talking to a colleague who lived in San Diego, like heating a house is something that you never, even had to fathom. And when I mentioned it's like, oh yeah, up in New England, when oil and gas go through the roof, you're spending, you got a 250-gallon tank at $6 a gallon. You're spending $1,500 to fill that thing that might last you 45 days. So you can run some pretty expensive, heating and so forth. Here's up in like the Pacific Northwest or like Minnesota across kind of, that northern strip. How are homes and stuff heated up in those areas? Oil?
Well, interestingly, the Pacific Northwest is a unique place because the vast majority of the electricity historically has been generated by hydropower.
Okay.
All the dams along the Columbia River, and hydropower has meant generally power rates in Washington and Oregon are lower than anywhere else in the country. Okay. Because of the contribution of hydroelectric dams. So when I was a boy, we heated our house with electricity. We had baseboard electric heat, and you could afford it because electricity was 2 cents a kilowatt hour. There's also some contribution from nuclear power, but that brings me to an interesting story because before I moved to California, I lived in Walla Walla County, southeastern Washington State. And in the last 15 years, the largest wind farm in the country was built along the Columbia River Gorge in Walla Walla County, an 800 megawatt wind farm owned by Florida Power and Light. Now, if you look at the map of the U.S., southeastern Washington is quite a ways from Florida.
I'm wondering how they thought this was viable to put a wind farm in the Pacific Northwest if you're from Florida when everyone else in the country decides against it.
Okay, so I had lunch with the project manager a year or so after the windmills were all up and running and whatever. And, we were having a friendly chat over a hamburger. And I said, so how's the wind farm working for you guys? Oh, it's okay, he said. I said, well, that's not exactly a ringing endorsement. He said, well, we have problems. I said, such as? Well, they're a maintenance nightmare. And he said, also, he said, they don't exactly pulse the power into the grid at a really even hertz. So we have some dirty power issues that crop up. But he said, and we kill a lot of birds with them. They chop up a lot of birds. But he said, the biggest problem is that as a utility, we're required to deliver power to our customers during peak load demand. And typically that's a time when the wind isn't blowing. So we have to keep a power plant on standby, ready to kick in and deliver power when the wind isn't blowing. I said, well, you guys are smart. You knew that all ahead of time. Oh, yeah, we knew all of that. I said, well, then, why the $800 million investment in a wind farm in Walla Walla County? Oh, he said, we needed the green credits. I said, what do you mean? Well, he said, by building the wind farm, we got enough green credit that we were able to build a 1,500 megawatt coal-fired power plant in Ocala, Florida. So it turns out that the subsidies for the green power in Walla Walla County was looked at by Florida Power and Light as just sunk cost part of the coal plant that they needed.
So one area that, I've curious to hear your opinion on being in this space for, decades is, and you mentioned earlier that, nuclear is one of the only one that is basically, somewhat carbon neutral, is hydro and so forth. I don't think where the U.S. right now is, correct me if I'm wrong, big producer looking into nuclear energy. I think some places in Europe and stuff are more, more mainstream with it. Is it the reason we don't do it just the fear because of the name nuclear to it, or there are other reasons because of, the industry and the oil and natural gas, basically kind of the lobbyists basically saying, hey, let's keep it, how it is. I'm just curious, what's the thought?
Yeah, actually, Chris, a nuclear power plant construction in other parts of the world is burgeoning. I mean, they're building nuclear plants in Asia. They're building them in parts of Europe. Sweden's building new nuclear plants. because everybody realizes that it's the only source of firm power that's completely carbon neutral. It produces no carbon output whatsoever. And we've seen the uranium price, by the way, in the last 3 months has up nearly 30%. And, you know, we still have like 110 old nuclear plants operating in this country, producing about 19% of the country's total electricity output. But we haven't built any new ones in a long time. And it's really sad because over the last 40 years since we built our last nuclear plants in this country, the technology has advanced light years. And the new generation of reactors are inherently safe in ways that the reactors that caused the problems at 3 Mile Island or Fukushima were not. So everybody's, you know, in this country, we're way behind the times in terms of nuclear energy technology. And it's become such a political football. You know, it's really quite sad because if you really are concerned about carbon output, nuclear power would be the best way to build a prosperous society without having to deal with that. But as you say, it's a fear factor here and it's an irrational fear based on where the technology sits today, but people have their ears and their minds closed to it, and they're just not willing to educate themselves.
And I guess as we start to, you know, talk and wrap up this episode, you know, you mentioned there's been a lot of technology in this sector throughout, you know, you know, a lot of people who listen are in, you know, some type of investing or passive investing type of, you know, where they like to look. Where do you see the opportunities for people, you know, I'd say today, the next 5 and next 10 years in the energy sector? What should people be looking for? They're looking to invest.
I can tell you what we're doing at LGX. We found an area where there's opportunity for relatively shallow traditional reservoirs that were underexplored. We're using the best modern science in an area that never had it applied. And so we can profitably produce oil without worrying about what the price is. Yes, we love $85 oil, but we could make a lot of money at half that because these are traditional reservoirs. We don't have to do heavy fracks. We've got a very good business climate in Indiana. We're not drilling deep wells. We're not doing horizontal fracks and things that are costly and whatever. So there are opportunities in oil and gas, obviously. The other thing is, if you believe that we are going to continue to transition more and more of the transportation fleet into electric vehicles and so forth, which I think is certainly the trend in the Western world, then you better add some copper to your portfolio, because we simply don't have enough copper in the world to make that happen. And most of the major banks, including Goldman Sachs and JP Morgan and others, are forecasting much, much higher copper prices in the coming years, because an electric vehicle uses 2 to 3 times as much copper as a conventional car. And you'd have to have all the copper needed for the charging stations and everything else. And it just isn't going to be there. So I think they came out with a saying about a year ago that copper may be the new oil in terms of the investment world. And of course, you need copper in all your buildings too, right?
Yep. Yeah. Copper. I mean, copper is used for a lot of wiring, you know, plumbing. It's kind of hit or miss depending now on some mains that run copper, but now people are looking more at a lot of plastics and stuff. But
you know, plastics made out of oil.
Yeah. So
it's going to be copper or oil.
Yep. So, you know, you talk about that, and, you know, LGX Energy, which is your company, you know, is, for people who are listening, can invest in your company, I believe, you know, through the website. I believe Dalmore is your, you know, broker dealer.
Yeah, they're managing the Reg A offering for us, Chris. And the website is lgxenergycorp.com. Love to have people take a look.
Yep. Yeah, and we'll have all of that in the show notes. And you know, like you and I together have gone through that Regulation A process, so that's a fun little venture to go through.
Indeed.
You know, you want to talk a little bit about the fund, the offering, you know, minimum investment, and kind of how the fund works?
Oh, sure. It's you know, well, you know what a Reg A plus is, so it's open to the general public. Dalmore manages the compliance aspect of it. They take a 1% fee on monies raised, and they make sure that people aren't investing more than 10% of their net worth, and that they're qualified and so forth.
Yep.
And we're doing a couple of webinars every week to explain the transaction. Minimum investment is 300 shares at $4 a share, so $1,200 and on up from there. And I think we've tried to structure this as an attractive investment for people that want to have some diversification into oil. And I would recommend that whether it's with us or somebody else, you should have some energy as part of your portfolio, without a doubt. The world runs on energy.
And that's one of the wonderful things I like to see about, like, the Regulation A offering is you get to invest in some private companies at a low barrier of entry, where previously a lot of these deals or offerings, especially in the real estate side, required a $50,000, $100,000, $150,000 investment. And, Howard, as great as I like you on this one podcast, it takes a lot for me to kick somebody $50,000.
Well,
But
sure.
when somebody's saying, hey, for $1,200 you can get in, see what it's like, learn how the process is, watch the webinars, get educated, and then, if you want, up that investment or, diversify or whatever it is. So, the Regulation A process, people, have listened to the podcast, know what that is. We talk about our offering, how we structured that as well. But it's something that's out there, that I find, again, to be very worthwhile for people to really start to invest and get an understanding in what they want to invest in. Because when you understand what you invest in, I think you end up doing much better. And as he mentioned, the website lgxenergycorp.com. We'll have all that in the show notes. So I got final thoughts, Howard, is, what's one thing over your career that you've had that's kind of been like your biggest lesson learned, from everything that has really got you to where you are today? And you've been very successful throughout your career. There's probably 1,000 things that contribute to that, but is there a moment or something that sticks out to you?
I think that's a very good question, Chris. And I think the answer is really pretty simple, which is education and learning is something that just starts when you get your college degree and walk out with a diploma. You haven't learned anything yet. Learning is something that needs to go on for your entire life.
That is great comment, because a lot of people, as you mentioned, go to college and think, oh yeah, I'm educated. You're college educated. You're not work educated, which, the only way to do that is by doing. And, it's great that people can take additional trainings and courses, but you can't rely on, spending a weekend with somebody to teach you on a topic to think that you're going to be a master in that. So, just something people would take away.
Continue to educate yourself in all sorts of areas and all sorts of things. Read different opinions, read different books, watch different podcasts like this one, and continue to keep your mind open as a trap to learn more things about more things. That's the lesson, I think.
And also listen to some that, might be an alternative view to what your view possibly is. Because
absolutely. The worst thing that's one of the worst things that's happened in this country is people listen to their own echo chambers, whether it be in politics or anything else. That's a very dangerous trap to fall into. You better be listening to people that disagree with you.
Yeah.
And
that's where I come up with the best ideas a lot of times, is talking to somebody and coming into disagreement with somebody, and all of a sudden they're, they might be half right or 3/4 right or 1/4 right, and I'm, making it whole, and then realize, well, if you take part of what that person's saying with what I'm saying, like, whoa, I'd merge those two together, and that's a good idea. So
exactly. Yeah, exactly.
Great. Well, Howard, thanks again for coming on this episode of Creating Wealth Simplified. As we mentioned, we'll have Howard's information, his website for people if they're interested to go learn more information about his Regulation A offering. And as always, people, thank you for listening to this episode of the Creating Wealth Simplified podcast. Make sure to leave us a review on your favorite listening station. Howard, thanks for having you.
Thanks, Chris. It's a pleasure to be here. Have a great day.
You too. Thanks. Thank you for joining Lauren and I on this episode of the Creating Wealth Simplified podcast. Each week, we bring you expert education, experience, and information in a digestible format to help you identify investment opportunities so you can build wealth through real estate and take action toward your financial goals. Enjoy the show, share with a friend, or subscribe to the show and leave us a review.